Could gold rewrite the rules of money again? China is expanding its gold infrastructure, and its central bank is buying gold. Meanwhile, there's talk online that gold becomes a Basel III HQLA from July 2025. Let's separate facts from speculation and break it down in 10 minutes. After sanctions and asset freeze risks grew, some emerging economies increased their allocation to gold, an asset that cannot be frozen. Gold is no one's liability and can hold value even outside payment networks. The key word in this shift is trust. There are two confirmed changes from China. First, continuous purchases by the People's Bank of China. Monthly updates report that through fall 2025, the PBoC added gold for multiple consecutive months. Second, the offshore expansion of the Shanghai Gold Exchange. In June 2025, Hong Kong saw the launch of the first offshore vault and 2 new contracts. This broadens access to physical delivery and storage outside mainland China, laying the groundwork for further internationalization. Gold Corridor is less an official government program and more an analytical frame. The core idea is a distributed network of vaults across BRICS regions to raise confidence that Yuan balances could be converted into physical gold when needed. However, it is too early to say a permanent, automatic conversion right has been institutionalized. Treat this point as a hypothesis. As of now, gold is not classified as a Basel III high-quality liquid asset. The online claim that it becomes HQLA on July 1, 2025 has been denied by the LBMA and the World Gold Council. While not HQLA in regulation, studies show gold has behaved like a safe asset during stress. Bottom line, behavior may resemble HQLA, but the rule book does not yet. If the rules change, it could be a game changer, so keep this on your watch list. In the first half of this year, large volumes of gold moved from London to the US, New York, boosting inventories there, and the pace slowed later in the year. This was largely driven by market factors, price differentials, tariffs, and premiums rather than a repatriation of US government gold. The realistic take it signals that the physical location of gold is gaining importance. Africa accounts for a significant share of global gold production, and informal flows are substantial. One report estimates that in 2022, hundreds of tons left Africa without being declared. In theory, a deposit gold borrow build infrastructure model is possible, but without stronger transparency, governance, and legal infrastructure, risks and costs remain high. To see whether this story is becoming reality, track 5 things. The PBoC's monthly gold updates. Does the buying streak continue? The SGE's offshore expansion. Any new vaults or contracts after Hong Kong? Official changes to Basel III LCR HQLA guidance. Any credible documents? Formalization of BRICS and collateral or guarantee schemes. Does gold collateral show up in the rule book? Structural shifts in London, New York flows and inventories. Is it a trend, not a blip? The facts are already visible: central bank buying and the SGE's offshore infrastructure. The hypotheses remain: Basel III HQLA status, a standing Yuan gold conversion right, and the formal use of gold in repo. Scenario A, gradual path: infrastructure expands and rules slowly adapt, nudging us toward a multi-monetary world. Scenario B, regulatory jump: HQLA or collateral rules change, and non-dollar collateral finance accelerates. What matters now is who builds which rules, and how fast. When new updates arrive, we'll revisit the 5 key indicators. If this helped, please subscribe and turn on notifications. Thanks for watching.